Will it rain? Will it snow? Will it be hot or cold? Check out your wedding day forecast. Even if your wedding is weeks or months away, it's only at brideaccess.com.
Did you know that the #1 cause of marriage is love, and the #1 cause of divorce is money? Sarah from the Utah Central Credit Union is going to be sharing with us tips, financial tips, on how to keep our marriage healthy and strong.
Buying a home is one of the most exciting and fun things that you will do as a couple. It's a big decision. There's a lot to keep in mind. And before you start thinking about decorating, swimming pools, landscaping, parties, all of those details, it's really important that you do a couple things first. One, take a financial inventory. What does that mean? Well, basically, one, get your money in order. It's really important to have good credit before you go buying a home. So pay down debt, save as much money as you can, but then when you do decide on a home, be sure to never buy a home that's more than you need or more than you can afford. Because that could ruin your credit and also ruin your financial situation. It's also really important to determine how much you can afford. It's recommended that your house payment for the month, which would also include your taxes and your property insurance, would not exceed 35% of your take-home pay. However, a more ideal amount would be 25% of your take-home pay. And keep in mind if job security might be an issue, to aim closer to 15%. The third part of your financial inventory is to decide what you're going to use for your down payment. An FHA loan requires at least 3% of the home value. But can I recommend doing more like 20%, because that will make sure that you don't have to pay private mortgage insurance, which will just add to your house payment every month. And the fourth part of your financial inventory is to know for sure what you both want. What are the must-haves in your house? What are you looking for? Do you need a garage? How many bedrooms do you want? What location do you want to live in? Those are important when you're searching for a home, and that you both know what the must-haves are and what things maybe aren't musts. There are important things that you do need to prepare for when buying a home. One, when you're serious about home looking, you need to get an earnest money agreement. This is basically something that costs about $500 to $1,000, but it lets your real estate agent know that you are serious about buying this home. Also, like we'd mentioned before, a down payment to a home, being prepared with 3 to 20% of that home value. And lastly, closing costs. Closing costs are basically all the paperwork that goes into buying your home. So those run usually between 3 and 5% of the home value. So for instance, if you're looking at a home that's $200,000, your closing costs would be between $6,000 and $10,000. Now I know you're thinking, oh, these are big numbers. But for closing costs, most of the time those can be rolled into the loan, so keep that in mind. Hopefully you'll be able to use some of these tips and be able to go out there and find that house of your dreams and be able to make buying your first home together a happy and exciting time. From all of us at Utah Central Credit Union, congratulations on this exciting time in your life.